What's happening here is that they're making an ammonium nitrate that is green, essentially no carbon emission, but it has a 50% price premium. So what they managed to do is that they partner with PepsiCo, a company that also has sustainability goals and targets. And with them, what they're doing is that they're sending this low carbon ammonium nitrate to potato growers in Spain, and PepsiCo pays the difference. The growers, once the potatoes are produced, they send them to Pepsi or the Lay's potato chips factories. Now, I don't know how many tons of potatoes are produced in an acre or how many bags of Lay's are made with 1 acre of potatoes, but Pepsi has come out and said that it's a few cents a bag in terms of cost. You keep going down the chain towards the end user, which ultimately is going to be people like you and me. That's how you can dilute that premium.
Well, welcome back to the Decarb Connect podcast. I'm Alex Cameron, and I'm the founder of Decarb Connect. We're a global membership and events platform that supports leaders in industry who are tasked with reducing CO2 emissions from some of our most critical industries, like chemicals that we're going to be talking about today, steel, cement, and more. Before we get into the meat of the conversation and my introduction to my guest, I'd like to give a very quick thank you to Jano Media, who've been a long-term partner with us, helping us develop great content and putting out the podcast and now this video podcast, and basically keeping me sane during the production cycle of all of this. So thank you to Jano. And with that little bit of podcast admin done, let me introduce today's guest, who's been, I would say, a friend of Decarb Connect for a few years now, Jakob Krummenacher. He is the Vice President of Clean Energy at LSB, based in the US. We're going to be talking about, I would say, a topic that's really, it's always been important, but is gaining extra significance now in a world where globally policy and incentives are subject to change. And ultimately, we need to understand what is the development of the market for low carbon products. So that's the nature of the conversation today. We're going to be taking a look at LSB's work in this space, how they're opening up these markets. And I think an important topic at the right time. Jakob, welcome. Lovely to see you. Can I ask you to kick us off with a bit of an introduction to you, your role and this point in time, and then we'll dive on into the discussion around low carbon products.
Thanks, Alex. Happy to be here. Thanks for the invite. As you mentioned, I'm VP of Clean Energy for LSB Industries. My background, I'm a chemical engineer by training, but most of my life I actually was in the oil business. I was into oil trading for BP, oil and products, here in the Chicago office, and I spent about 12 years, or the first 12 years of my career into doing that. After that, I transitioned into the ammonia world, working for CF Industries. Spent about 4 years there. And that was right around the conversation of hydrogen and ammonia as fuels. So when you are an energy guy in a fertilizer company, you're automatically clean energy. So that's how I started that clean energy group at CF Industries. And then I moved on to LSB Industries, where I've been for the last 3+ years. I lead this effort for LSB, so my job entails anything to do with lowering the carbon footprint of our product, becoming more environmentally friendly as a company, issuing sustainability reports, and then looking for those growth opportunities, not only with the mindset of how does it make us as a company in terms of profitability and size, but also where is it going to put us in terms of carbon footprinting for the future.
Well, that, I think, is an ideal intro. As I said, you've chosen a topic that I was really pleased to see you suggest, which is around the whole need for and how we go about building a low carbon materials market. So as we get into it, I know we're going to be talking about like the ultimate dream of clean products, I suppose we might name them, but we're also going to be talking about low and lower carbon products as well. So let's start with a bit of groundwork here. Where does the drive within LSB come from to create, I think it's low carbon ammonia and other downstream products, right? It's not just low carbon ammonia. So where does that drive come from within the business?
And this is probably one of the main reasons why I joined LSB is that the leadership at LSB is very adamant about the future, the future of the world, if you will. We are a chemical company, an industrial company that utilizes carbon-based raw materials in order to turn them into useful chemicals. And as a result, then we have a heavy carbon footprint or a heavy emission of CO2. So the view within LSB is that going forward, maybe 20, 30 years from now, the way that we operate today, not just us, but the industry as a whole and other industries as well, will not be allowed given what's happening in the concentration of CO2 in the atmosphere and the associated climate change, right? So in 2022, we got together the executive team, which I'm part of, and some extended leaders within the company, and we created sort of the vision of LSB on what we think we should be in the future. So we came out with that LSB, we want to be a leader in the energy transition in the chemical industry by the production of low and no carbon products that can build, feed, and power the world. And if you think about it, today we take natural gas, we make ammonia, and then we make a whole different stream of products that can go in different places, right? Today we can use that ammonia to fertilize crops and grow food. We can use it to be the raw material into the chemical industry to make products. And in the future, we're looking very much forward to using that ammonia as a fuel, whether it is as a marine fuel, or as a power generation fuel as well.
I guess a bit of the context that I'm sure most people who watch or listen to this will already know, but for those who are not working in the CO2 intensive industries, our foundation industries, is this is like, this kind of work is like stopping a tanker at sea, isn't it? It's not, you're not able to suddenly say in 5 years' time, done. Oh, now we have to do it. Bosh. All operations transform. This is going to be a process that takes some time for a business or an industry such as chemicals and a business such as LSB.
Absolutely. And I would go further and say that when people talk about an energy transition, it's more like an energy evolution. It took us 130 years to develop the carbon-based society that we have today in terms of nat gas, oil, and coal. And to think about that by 2050, we're going to be in a net zero world is incredibly ambitious, and it was going to cost incredible amount of money that we couldn't afford today, for example. And that's one of the reasons why when we issue our first sustainability report, which was issued in 23, but is compiling the 2022 data, we were very adamant about setting targets of how we're going to decarbonize by 2030. So looking at the next 10 years. But we on purpose omitted any net zero commitment by 2050 or any time frame, simply because today we don't know how that's possible. We need the technology to evolve. Flue gas carbon capture, for example, will be a crucial technology for us to operate. If we're able to reach net zero, it will be through the flue gas capture.
Well, so that leads me just again into a bit more context question, and then we'll look at these specific projects you've got going on. But so just again for context, what's the kind of the summary of your route map as a business to lowering carbon intensity? You know, the key technologies you're looking at. What does that look like for you?
And that's kind of what I do. Basically, my job is to be able to find those niche opportunities that can help us lower the carbon footprint, and at the same time keep us profitable as a company. Right? We can't really bet the bank on a technology and then it costs too much and then all of a sudden we're making negative profit, because we need to exist as a company as well. So those two things go hand in hand. So not only looking at potentially carbon capture sequestration, also making green hydrogen, being more environmentally friendly in terms of electricity purchases if we do renewable power instead of conventional power. So at the end of the day, it's not a single answer to the problem. It's a complex situation, and it will vary from plant to plant depending on what's available in your facilities. Like for example, our carbon capture and sequestration project at El Dorado, Arkansas, Well, why El Dorado, Arkansas, when we have three facilities? Well, a few things. Number one is the only facility where the subsurface is suitable for carbon or CO2 storage, right? Carbon capture. Number two, in that facility, we don't utilize the CO2 to make urea or other downstream products. So the CO2 is being invented today. So all those things line up in a way that make the carbon capture more cost effective compared to other facilities.
So you've mentioned that El Dorado project. I know you also have a blue ammonia project in the Houston Ship Canal. Sorry, can you give a little bit of a sort of a flavor for what does that entail?
Yeah, that's a brand new facility of 1.1 million ton ammonia per year. It's a world scale. And the idea there is to utilize technologies that can lower the carbon footprint of the ammonia significantly. So instead of doing an SMR, steam methane reformer, where today you end up with 40% of the CO2 as flue gas, very difficult to capture, and the 60% is high purity stream, which you can capture. In this particular case, we're looking at the ATR technology, autothermal reforming, which allows you to capture somewhere between 98 and 95 to 98% of the CO2. In addition to that, we can certify the gas that we purchase because there are certain producers out there that have certifiable natural gas that lower the upstream emissions. So when you do all of those things, you can end up with a really low carbon intensity, not as close as zero for green ammonia, for example, but very close. So, that's what we're doing. The idea in that project too is that as you look at the use of ammonia for energy, the real advantage is that ammonia doesn't have any carbon atoms on the molecule, which means that if you can make it carbon free, then you have an end-to-end fuel that is decarbonized. And that is the appeal for the marine industry. That is the appeal for the power generation industry, the utilities. And that is the goal with this project that we're doing now. We're still in the FEED studies, and we're looking at all the options on how we're going to move this project forward. One of the things, like everybody, that we have determined is that the construction cost has increased dramatically. Which makes the ultimate cost of the product much higher than expected. Everyone is in the same boat. There's no difference from all of the announced projects. But this is a time where our engineers, as well as our partners engineers like Air Liquide and Impex, they're getting together and thinking through how can we be more cost competitive on the project.
So, I mean, when you're looking at massive projects such as those two examples, again, we're going to be talking about one of the justifications for it, which is, the ultimate market for lower carbon products. But one of the ways they have, I guess, even been able to start has been through tax credits, government incentives. What's your kind of sense of that landscape for you at the moment?
Yes, very interesting question. We just had an administration change in the United States, and the new government has a complete different view from the prior government when it comes to environmental attributes or environmental benefits. So it's going to be very interesting in the coming months as to how and what shape will all this end up. But if you look into detail at the different incentives that the U.S. government have in place, for example, the 45Q tax credits, which are associated with the carbon capture and sequestration, those have been around for a very, very long time and have gone through various administrations, and they continue to be in place. In fact, the incentive amount or quantity have gone up over the years. I think it started at $8 a metric ton, and it's now at $85 a metric ton. The fact that most industries that would benefit from the 45Q are located in Republican states, that's going to be very challenging for the current administration to reverse or reduce that. I can see governors from those states having a say on reducing this benefit because it will reduce jobs, it will reduce industry development, it will reduce the future taxes for them. So it can be a big deal. So we're very comfortable that both of our major projects that are in place will rely on 45Q, which is an incentive that's very likely to continue to be in place through this administration. Now, if you're talking about green hydrogen, green ammonia with the 45V tax credit, that's relatively new. It wasn't fully baked or completed in the prior administration. That one is at risk in my mind. Although that one was designed to incentivize smaller green projects in order to get the technology up to speed, start lowering the production cost of electrolyzers and other units. But I'm just not very confident that the current administration will see it that way and will continue with that incentive in place.
Yes, to your point about it being new, I suppose there's also not enough people currently, already benefiting, already using
Correct.
it, already, feeling it's so fundamental to their plans that they'll fight for it. So it'll be interesting to see what happens with that.
Yeah.
Okay, well, let's sort of have a look at one of the layers of how we go about opening up markets for the sorts of lower carbon intensity products you're talking about, and that is carbon intensity certification. And let's sort of do a two-layer approach here. First of all, why is this even a thing? Because some people who are going to be listening and watching may not have much connection to the industries that you and I are talking to or working in all the time. So that first of all, get a little bit of a feel for why does this matter, and then let's have a look at how you're going about getting those key products and locations certified.
Yeah, absolutely. So the world today makes 200 million metric tons of ammonia annually, right? And most of it gets converted into downstream products, fertilizer, industrial use, but about 20 million of it gets traded. Right. So the way ammonia trades today or gets sold and bought today is basically the producer says, I have a ton of ammonia and here's the specification of the quality, of the purity, and let's transact. And as a buyer, the buyer will buy the product and he can always go and have a lab or an independent entity double check the quality, the purity of the product. And if it meets the standard that the spec set, then yep, we got a deal, no problem, and I pay and I go away with my product. So now when we start making ammonia in a low carbon manner, the product itself doesn't change, it's the same. The quality, the purity, the spec is absolutely the same. But the carbon intensity by which you made it or the carbon intensity of the resulting product will vary. But that's not something that you can measure on the ton. It has to be measured, it has to be reported, but it cannot be double checked by the buyer, right? So therefore, certification means that you need to have somebody, an independent entity that comes to your site and can audit it perhaps on an annual basis and say, yes, the way you run your plant, you follow a protocol, we follow a methodology to calculate the carbon intensity, and we can confirm or certify that the tons that you made have such carbon footprint. Then you need to take those certificates and go into an independent registry that says, okay, I'm going to take those certificates, I qualify, I double check the auditing report. Now those certificates are in the registry and available for trading for anybody that wants to buy them. Then people can buy them, can sell them, and then ultimately an end user of the product that wants to use the environmental attributes of that product will retire them. And then that person can claim, well, the raw materials coming into my process are lower carbon footprint, and here is a certificate that I can prove it.
So one of the things I'm quite often curious about as this certification of, lower carbon materials grows is the role of, I suppose, blockchain and other technologies in securing it. I guess it's early days for that, but is that something you see as being essential, or is it a bit of it's a nice to have, we can build it in later? Where is that in your thinking?
I think the jury's still out for whether we actually need that or not. Um, One of the things, maybe to give you an example, right? One of the things that would be advantageous to have blockchain DNA kind of technology into your product is that then you can track the physical ton of that low carbon ammonia around the world. And if you mix it with other conventional ammonia, you can still keep track, and then you know the quantities, and then you'll be able to have a resulting carbon intensity. So that's an advantage. I agree with that. The thing is that when you create certificates and you put them into a registry, the certificates could be moving or exchanging hands separately from the physical ton. And to give you an example, why that is hugely advantageous that the certificates trade separate from the physical ton is that if you take our El Dorado tons, for example, in 2026, we'll be capturing CO2, we'll be making low carbon ammonia. So let's say there is a buyer in Japan that wants to utilize some of that low carbon ammonia. If we want to go into the blockchain DNA situation and do a mass balancing approach, that means that I have to put those tons on a truck or a rail car, take it down to the Gulf, transship it into a vessel, take it to Japan, and deliver the low carbon product. Well, by doing that, I just emitted maybe more than half of the CO2 that I work hard to abate. Now, the other option is, well, I can put those certificates up for sale in the registry. Certified carbon intensity. A Japanese buyer say, I really like the carbon intensity of that product. I'm going to buy those certificates. But the physical ton, I'm just going to go ahead and buy them from Indonesia or the Middle East, a place that's so much closer to Japan. And because the ammonia is the same, so what is happening in that situation when he brings the ammonia into Japan with the certificate from my facility, he can say, this is the product, 20,000 ton cargo, and here is the carbon footprint. So we're essentially swapping that ammonia around the world. So Japan will be consuming the equivalent of the El Dorado tons, but whoever takes physical delivery of El Dorado tons will actually be receiving that Middle Eastern or Indonesian ammonia carbon footprint equivalent. By doing that, you can benefit hugely on two fronts. Number one, you don't emit as much on the logistics and transportation, CO2, right? Everybody wins on that one. But also the logistical costs are much lower. Instead of going on a truck to a boat to ocean going freight, you go a much shorter distance, ocean going freight only.
But clearly, sitting in the middle of that is why this need for trusted, transparent, that real, really robust certification is so important. Because, as we've seen in other kinds of markets, the moment there's a question about that validity, it causes such issues. And this is such a nascent market, isn't it? Not just specifically in ammonia. I mean, in general, lower carbon products. It's a new market. So how does a company or how does the sector go about ensuring that it really is that trusted partner and a partner that other people trust, that stamp that it is, what it says it is, a lower carbon certified product?
Absolutely crucial. At LSB, we obviously believe that is going to make or break this industry, essentially. So we are participating with the Ammonia Energy Association and with the Fertilizer Institute on certification of ammonia. And I'm actually co-chairing the committee of certification along with folks from Yara and CF Industries as well. And the idea there is that as you create a group that is not only about ammonia producers, but also about other industrial players. I mean, Exxon is part of the AEA, other big corporations that are not necessarily into ammonia yet, but have other capabilities. Like, for example, they know how to handle marine fuel today. Well, we can learn a thing or two about how to handle that if we're going to need to learn a thing or two if we want to use ammonia as a fuel for that, right? So what we've done in those two organizations in terms of certification, we created a protocol, essentially a methodology which serves as the footprint of what you need to do in order to calculate the carbon intensity of your product. That is kind of the blueprints that an auditor will take and say, hey, you have this type of ammonia plant. Okay, I'm going to need all of this data in order for me to be able to come out with the carbon intensity of your product. Okay, that is done. That is part of the website of the AEA, part of the website of the Fertilizer Institute as well. We also moved beyond that, and we hired an auditor to come and audit a few of the facilities. Essentially, it's going to be a desk audit because we are still not capturing the carbon. But what we did at El Dorado, for example, is that he came in and the auditor looked at the 2022 data and determined what the carbon footprint of our facility was. Now, he made the assumption that if we had in place the carbon capture that we are building right now and will be operational in 26, if we had in place that facility in 2022, what would have been the resulting carbon intensity? And sort of came up with a number that is the pre-certification number, because it's pre-construction, right? You're still not doing it. And that's where we are today. So we also, with the AEA, we hired a registry that today works with certified natural gas. And they're doing a pilot registry for ammonia certification. So essentially, what are the things that you need to check for somebody to be allowed to bring in some tons or certified tons into the registry? How are those certificates going to move from one owner to another or one player to another? How are you going to be retiring those certificates? And all of those kinds of things. So essentially, we have an idea in our minds of how that would work, but now we need to, put it to work and see. You always find issues here and there, right, that you've got to resolve. But that's where we are. So essentially, at the end of the year, we'll have checked on pre-certification of facility. We have also checked on a pilot registry that can, the functionality of a pilot registry that can take those certificates, trade them, and then retire them. And beginning of 26, that means that we'll be ready to start putting it to work in the real world. Once those facilities, particularly ours at El Dorado, then CF Industries in Deville would also have low carbon as well. And then Nutrient would also have low carbon, but particularly in Canada. I think they're doing the capture already, by the way, which started a way back because of Canadian incentive. We're ahead of the incentive of the US at the time. So this is going to be crucial, and it's going to be very exciting times over the next 12 to 18 months of how this certification is going to grow. But at the end of the day, in order for it to be successful, you need three key ingredients. Number one, it needs to be independent, right? It has to be a registry that doesn't belong to all the producers of ammonia, for example. It has to have information from all companies participating in the industry. It has to be robust. It has to be transparent. The transparency meaning that what protocol are you using, how exactly are you calculating the carbon intensity. Obviously, as a producer, you don't want all of the information of your data out there. That's why the auditor gets in between, and the auditor confirms that the protocol was followed, and therefore this is the carbon intensity. But the protocol information is public, it's transparent. And it needs to be robust in a way that it doesn't allow for double counting. The registry needs to make sure that the quantity is such as the auditor said it was, that the paper certificates got traded and keeps track of who owns it at what point in time. And also, whenever the ammonia is consumed or whenever the end user wants to retire it, it needs to keep track of it as well.
So there we have our layers already, which are, we know how you're planning to reduce your CO2, which has additional costs. We know how you are certifying those products that have, been through a different kind of a process. now clearly what we need to understand is the buyer. And as you and I talked about in the prep call, there's you could talk to many industrials at the moment, and this is probably their main source of anxiety, is how do we get our product in front of the people that will buy it at this early stage of a market. And it's not as simple as just knocking on every client's door, is it? There are certain sectors out there, buying sectors, who have more of an incentive, more of a need, more of a drive to be that buyer. So who are they for you when you think about the kind of swathe of clients and client types that LSB serves, which is pretty broad? How do you go about identifying the groups that are most likely ultimately to be your early buyers of these materials? And then how have you been engaging with them?
Yeah, so today we have a customer base for our product, unlike a traditional ammonia producer, which sells 80% of their product into the ag market and 20% into industrial. We're more on a 50-50 split. Half of our product goes to industrial uses, industrial and mining, and the other half goes into the ag market. One thing that we quickly realize is that in order for this to work, you need to involve the end-to-end supply chain. So not just the product that we make, our suppliers of our feedstock, but also the end users of our product, and ultimately the end consumer, like you and me, for example. And to give you an example, if you make green hydrogen today, some people claim that it can cost 5 times more than conventional hydrogen, right? Now, if you take that hydrogen and you convert it into ammonia, because there's only 18% hydrogen in ammonia, so that 5-time premium all of a sudden goes into a 2-time premium into the price of the ammonia, right? And if you continue downstream on the chain, now if I turn that ammonia into ammonium nitrate, then that's only 40% ammonia into that ammonium nitrate, then I'm only about 45% premium on that ammonium nitrate, which means that it's a much different proposition to ask somebody, hey, I got a low carbon ammonium nitrate product that is 45% more expensive, versus telling somebody, hey, I got a zero carbon hydrogen that's going to be 5 times more expensive. Those are completely different situations in order to pass it through into their customers. So last year, for example, our commercial team did a really good job of signing an agreement with Freeport-McMoRan, a big mining company. They're a customer of ours for years. They buy ammonium nitrate, and that's their raw material, the feedstock for their explosives that they do for blasting the mine zones and then extracting the minerals. They were very interested on reducing the carbon footprint as a company, and they're doing things to do that. And one of the things is looking at the raw materials. So, what's the carbon intensity of my ammonium nitrate feedstock? And so they created this deal where once we are operational in 2026, we'll be sending them low carbon ammonium nitrate or blue ammonium nitrate via the carbon capture and sequestration. And it's going to be sold at a premium because there is a value for the environmental attributes of that product. And they'll utilize it into their copper mining operations. So eventually, that doesn't stop there. At some point in the future, it could mean that, now they're making copper. And copper can go into a lot of applications, not just long distance electrical wires, but also niche markets like inside cell phones and laptop computers. So there could be a product down the road of copper that is made with lower carbon intensity, and perhaps people will pay a premium because of that environmental benefit. So as you go down the chain, you can dilute the higher premium and eventually be able to recoup it and satisfy the entire higher cost through the chain, because there's undoubtedly a higher cost of making low carbon products.
Yes, I know we've spoken to clients of ours in different sectors, and one of them in particular from the metals, who's a metals producer, was talking about the challenge of the middleman, the challenge of people in the middle of the value chain who just don't necessarily understand that some product could be made available, or even when they could be made available. And if some of their clients are only understanding what's possible through them and not direct from the original producer, there's also a missed opportunity. So for that, they, like you, have taken that step of sort of going slightly further down the value chain to explore, okay, which markets are more likely, what types of big businesses are more likely to buy this, and then let's, with our middlemen, with our value chain, come up with the right proposition.
So one market that we're still working on trying to develop these low carbon ammonia, low carbon product as a customer is the ag market. And a lot of people's mind is that, well, the ag sector is a very tough market. They're low margins. They don't make any money, the farmers today. So why would they pay a premium for the low carbon ammonia? And here is an example that how these things can develop. Fertiberia is a fertilizer company out of Spain, and they have a small electrolyzer plant that they make a small quantity of green ammonia. Probably the green ammonia cost is double the conventional cost. They turn that green ammonia into ammonium nitrate, and ammonium nitrate, solid granular ammonium nitrate, is a fertilizer in Europe. It's probably the number one nitrogen fertilizer in use in Europe today. So what's happening here is that they're making an ammonium nitrate that is green, essentially no carbon emission, but it has a 50% price premium. So what they managed to do is that they partner with PepsiCo, a company that also has sustainability goals and targets. And with them, what they're doing is that they're sending this low carbon ammonium nitrate to potato growers in Spain, and PepsiCo pays the difference. So the potato grower pays the conventional ammonium nitrate price, and then PepsiCo pays the premium, the green premium on that product. The growers, once the potatoes are produced, they send them to Pepsi or the Lay's potato chips factories, and PepsiCo turns those potatoes into bags of chips. And when you're talking about, a $400 a ton premium, and you use a third of a ton in an acre of potatoes, so you're looking about, $100 plus a ton premium. Now, I don't know how many tons of potatoes are produced in an acre or how many bags of Lay's are made with 1 acre of potatoes, but Pepsi has come out and said that it's a few cents a bag in terms of cost. So again, this is a prime example of as you keep going down the chain towards the end user, which ultimately is going to be people like you and me. That's how you can dilute that premium and then eventually be able to pass it through, which is a great example, by the way.
Yeah, I think there's something really interesting in that in the building sector as well. I think this has changed a little anyway in the last couple of years, but certainly 3 or 4 years ago when we were just starting out, we heard a lot that ultimately the big property developers, they don't want to pay any more for this. People don't want to pay any more for this. I think that there's a difference between everybody wanting to pay more for this and certain key groups helping a market get moving. And I do think, in all the sectors that we interact with, all of these foundation industries, there are those very specific value chains that can be activated. And I think that's they're both very interesting examples, but I think that kind of extended food and beverage value chain example is a really interesting one.
Yeah, and another point on that too is a socioeconomic dilemma of this whole decarbonization front, right? For example, if you're looking at decarbonizing, so there are countries in, say, Africa that are starting to develop, and now they have the means of utilizing, conventional fuels. You cannot just go and tell them, look, you can't do that now because of the CO2 in the environment. We need to go green or go low carbon. Therefore, you have to use this more expensive option. Now, is that fair when the US, Europe, and most of the developed world have been using fossil fuel-based fuels for 130 years? And we are the root of the problem of the CO2 in the atmosphere. And now that other countries are starting to develop, and China is one of them. China, 30 years ago was a different scenario compared to today. And if you look at the CO2 emissions per capita, it's a lot less than, even though it's a huge as a country because of the size, but on a per capita basis, they're way below the developed world, right? So we also have to deal with those things, So how can we, in a way, develop these technologies, mature the technologies along the way so that they become more cost competitive, and then we can deploy them into these developing countries, so that everybody wins at the end.
Well, I suppose that the kind of the next and kind of latter sort of stage of this whole market development piece is how you go about pricing products that have that lower carbon intensity, or how do you price any product with any level of carbon intensity, super high through to very little. So I'm guessing, and I'll be interested to hear your thoughts on this. I'm sure part of this comes back to that certification process, perhaps, and the kind of type of is it to do with the relative merits of those products, or how do you go about that rather than me guessing? Let's do that.
Well, the short answer is that it's going to be a challenge. The pricing companies, the market participants that they create the quotes for ammonia, Tampa, ammonia, US Gulf. They're all come by and say, hey, we want to create this market of blue ammonia. What should we be looking at? How can we do it? And the answer is that it's very, as blue ammonia is very impossible to have a single price premium. And the reason for that is that when you think about blue ammonia, the definition of blue ammonia is just basically ammonia, conventional ammonia with carbon capture and sequestration added, right? But it doesn't tell you anything how much of that carbon was captured. Did you capture 60% on an SMR? Did you capture 98% on an ATR? And those two will result in a very different carbon intensity or carbon footprint of the ammonia product, right? Likewise, green ammonia, very expensive to make, but you have zero carbon emissions. So, you get ultimately a CI score of 0, but a big cost, right? So therefore, it's going to be very difficult to have a dollar per ton of CO2 emission kind of price premium, because it involves also different technologies, right? If you take our El Dorado site, for example, and we're doing 2 of these technologies, 2 blue ammonia plants that we're working on right now, right? One is our existing SMR facility at El Dorado. We're going to reduce 60% or so the carbon intensity. But it is a plant that is in operation today. It's been in existence for a while. So really the only CapEx associated with this blue ammonia is the capture facility. Therefore, the cost of producing it are significantly different than our Houston Ship Channel project, for example, where we're building everything new and you're investing a significantly larger amount of capital requirement. And therefore, you end up with a completely different cost structure of the product than what we are achieving at El Dorado. So when you take all those things into account, then you can really say, here is the blue premium price, or here is the green premium price. It's going to be more on a plant-specific pricing, and whether it is FOB, delivered, and all those taken into account. And also, in order to add a little bit more nuance of it, if you think about companies that are planning to use low carbon ammonia as a fuel, for example, power generation, let's take that as an example. They use coal, they use gas today. So those companies are very comfortable with pricing structures that are tied to the price of natural gas, for example. So therefore, when they come and talk to other folks, they're interested on a nat gas plus type of pricing structure for the ammonia. They think they know the gas market. Maybe they do, maybe they don't, but they're comfortable with it. But one thing for sure, they can hedge the natural gas price. And that's a very deep liquid market. It can go, 12 24 months forward, and they can do that hedging. So they can protect themselves in certain market situations. That's why it's appealing to them. But that means then that that adds even more nuance on the estimation or calculation of what that low carbon premium is.
I was mulling the kind of when you think about how other types of product markets have evolved. So crude being a good example, where you have these quite wide variety of price points based on location and also chemical components and so forth. Like, can you see a future where there is more consolidation between whether it's types of technology used in a production location, or I don't know, how could you imagine perhaps in the midterm that the actual kind of the commoditization of a lower carbon product market might look?
I agree, and that's a very good example on the crude markets or the marine fuel market the same way. I think what's going to end up happening is that you're going to see demand centers. Like if Europe becomes a large buyer of low carbon ammonia for energy use internally, then you could see Rotterdam, for example, being one of those demand centers, pricing centers. But that still brings in the little nuance of the carbon intensity and the means of decarbonization as the price point, right? So you could have a market that says, okay, green ammonia, Rotterdam deliver, you got a quote. Now you got blue ammonia of 95% reduction from conventional, and you got a quote. And then you get blue ammonia on a 60% reduction from conventional, you got a different quote. So you're going to have kind of like it's like going to a gas station and you have your conventional gasoline octane level and a price, and you got your mid grade, and then you got your premium gasoline. It's going to become like that, except that it's a single product that is the same. And all those different grades are just based on the carbon intensity that you certify your plant at, and that you reduce by doing certain things that you did. So essentially it's going to become something like that. And then you can picture another demand center in Japan and another one in South Korea. And the US will change dramatically in terms that we have been for a long time, although we are a net exporter of crude for a while now, but for a very long time, we were a huge demand center for oil and oil products. And now that's going to flip with all of these facilities that will be announced, that are being announced, that will be built in the US. The US is going to be kind of a supply center of this low carbon ammonia, particularly on the blue side, to the rest of the world.
That's kind of an exciting vision, especially in a year when so many other things are changing. That's a really interesting message and possibility. Well, we've covered quite a lot of ground. We've talked about the roadmap. We've talked about some specific projects that are allowing you then to start developing out certification, and you've talked about this need for value chain activation. If we just close out really on that point again, so how do you see your next steps in building out value chains, working through value chains going? What can you tell us about what's coming next?
I wish this podcast happened 2 months from now, because right now we are in the middle of developing a detailed company strategy of how we're going to continue to develop and be a key player, enabler of the low carbon energy world of the future. So there could be, today we're doing some things that again extends that supply chain into other markets and area. For example, one market that is very appealing is the ethanol production in the United States, right? Corn to ethanol. Because there is a direct link there, and there's a direct benefit as well to have. Like, for example, if you produce corn with low carbon ammonia, then the carbon intensity of your corn is lower. And if you turn that into your ethanol, then that should be resulting in even a lower ethanol carbon intensity, which then if you sell it into the low carbon fuel standard markets, for example, that should give you a higher premium because of the lower carbon intensity. So then again, this is your example that you go down the chain all the way to the end, and then a small premium on a cents per gallon basis will help you pay dollars per ton on acres or tons of ammonia, corn or production or tons of ammonia. So this is again an example of what we're doing. We're also working with new companies and new technologies in order to do the same. Take, for example, Amogy, which is a company that has a technology that can take ammonia and produce electricity with it. So they have a proprietary technology where they catalytically they reduce the ammonia to hydrogen, and then the hydrogen is run into a fuel cell, and then it generates electricity, and it's somewhere around 45 to 50% efficiency. Which is much higher efficiency than if you were to burn the ammonia and produce electricity in a turbine, for example. So this company, in fact, next month they are showcasing in Houston a tugboat. They purchased an old tugboat, and they dismantle all of the internal components, and they retrofit it with their unit. So they have an ammonia, pressurized gaseous ammonia tank. They have the unit for power generation, and they drive the propellers with that electric motors. So this could be a very revolutionary technology, because in the inland waterways in the United States, where you have a very big barge traffic up and down the river, that's how most of the grain crop is taken out and exported by the barge taken out. Because of emission regulation, those tugboats today are required to run ultra low sulfur diesel, which is a very expensive fuel compared to marine gas oil. Well, if you compare ultra low sulfur diesel with ammonia, it's kind of competitive. Ammonia at $375 per metric ton, which is kind of like the 10-year average of ammonia. It obviously goes up and down in cycles, but that compares to about $4 a gallon for diesel, which means it's there. So this could be one of those markets that could develop with very little incentive. You're still probably going to go through and need to convince the Marine Coast Guard to allow you to refuel ammonia as a fuel on these tugboats on the river. You need to prove to do it safely and all that. So there's still some things to work through, but it could be revolutionary in terms of emissions, and it's right here in the United States as an end user, which so far all of the incentive have been for the production side only. So we continue to do these little pushes here and there and find these niche markets that could be the next wave for the use of low carbon products, particularly ammonia.
Mm. Well, so let's wrap then with, I'm really interested to know that if you were sitting in a room right now with representatives from other CO2 intensive industries, whether that's steel or cement or whatever it may be, what would your call to action to them be? Given everything that you've been learning, experimenting with, building out and so forth, what would be your primary call to action around this kind of market development piece?
My call to action is to basically be more proactive. There are lots and lots of different opportunities that most people are unaware of. And depending on your particular situation, on your processes or your locations, there could be opportunities that you can lower the carbon intensity of your products and at the same time not impacting negatively your financials as a company. So I think you need to be out there. You need to be more proactive. Talk to a lot of people. Go to conferences like Decarb Connect, for example, and that way you can find what works for you and what works for your companies and your facilities. And like I gave you an example earlier on, what worked for our El Dorado site doesn't necessarily work for our Cherokee site or for our Pryor, Oklahoma site. But there are things that work for different companies. So you have to be out there and looking for those opportunities and develop them.
Yeah, we need that the entrepreneurial streak that got these industries off the ground. We need that front and center, don't we, in this kind of work?
Yeah, and right now it is all voluntary, right? There isn't a mandate to reduce carbon. Perhaps it will come, perhaps it won't. Nobody knows. It's timing. I can assure you it won't be in the next 4 years because of the current administration, but it could be on the books at some point in the future. So if you get ahead of that, that's just going to give you that competitive advantage when that comes. And or if you want to participate in foreign markets who do have policy and legislation that mandates these low carbon products, then that gives you that competitive advantage to do that as well.
Well, Jakob, always a pleasure to see you. Thank you so much for joining this particular discussion, and yeah, a topic that I just am totally obsessed by at the moment, I have to say. So great to hear from someone and from a business that's really going the extra mile to kind of find these new ways of developing a new market. Thank you.
Thank you very much. Happy to be part of this, and really enjoy the discussion. Thank you.
At Jano Media, we recognise that great content has the power to create impactful and positive change for lives and society. Whether that's video, live streams, photography or podcasts, partnering with us will enable you to harness the power of content to engage, inform and inspire. Reach out to us today.